Thank you so much for having me. MX is a Utah-based company. We have been in the open banking space since its inception, engaging in how data moves, how we clean and enhance data, and then we put it to work with software solutions. So our customers are about 2,000 financial institutions. My role is the Chief Advocacy Officer there, so I do a lot of regulatory engagement, policymakers, the ecosystem. I'm the co-chair of the Financial Data Exchange. And I am a long-term, die-hard personal finance advocate.
Yes, that's great. And so, Dan, why don't you just tell us a little bit about your history with the CFPB, and you can tell us about Sunset Park Advisors. I didn't want to shortchange you there, but tell us a little bit about what you've been done at the CFPB.
Sure. So thanks for having me, Peter, and thanks to the Spring Labs and everybody for organizing this event. My name is Dan Murphy. As Peter mentioned, I'm formerly of the CFPB, where I was one of the primary authors of the CFPB's open banking rule. Many of you may affectionately or not so affectionately know as the 1033 rule. Previously, I did some work in the Financial Health Network as well, for those of you who are concentrated on the consumer space. Right now, I'm advising fintech companies working in open banking and other digital finance issues, and yeah, really excited about everything happening in the space.
All right, yes. So let's kick it off. You were one of the authors of the open banking rule, and it's like, when did you start on that? What year were you working on that?
So the open banking rule has a long history, going all the way back to 2010 Dodd-Frank,
right.
So post-financial crisis. And so the agency has been working on it in some way, shape, or form since then. I came in with the Biden administration to really accelerate the rulemaking process. I was there through most of the critical rulemaking stages, including the small business consultation known as SBREFA and the proposal of the rule. The rule, though, importantly, actually really kicked off in earnest under the first Trump administration and was always a bipartisan initiative.
Right, okay. So when you got to work on it, though, like the AI revolution as we know it today, when ChatGPT 3 came out almost 3 years ago, I guess, that really wasn't part of the conversation, right? So how, as you were drafting the rule, as you were kind of thinking about the impact, how were you thinking about AI?
Sure. So during the years that I was primarily working on the rule, AI started to become a significant part of the conversation in a way where, you would have had to be living under a rock to have missed it, right? And so open banking and AI have a lot of significant intersections because right now everyone is talking about agentic AI use cases. For any consumer-facing agentic AI use case, you're really just talking about a new kind of open banking use case. And so it was something that my role as the markets person leading the CFPB rule was to think about how will the market actually implement this at the end of the day. There were sort of two primary lenses that I was thinking about that through. One was just tech neutrality. When you're writing a rule like this, you know that the market is going to change around you and it's going to change after you're gone. So being on stage with maybe two Australians, I'll pick on Australia a little bit.
It's got to be a first here in Utah.
It probably is.
Of course. So one thing I think that different jurisdictions did wrong, and maybe Australia is a good example, is they tried to get too prescriptive on the tech side. And so if you go to the Australian page, you can actually find there's a GitHub for this, where how should you code up your API. It gets really, really detailed. We took a much more principles-based approach, where we focused on outcomes and functionality at a higher level, and tried to leave it to the market. And actually, we didn't even say API. We talked about developer interfaces, which in the future, maybe that becomes a model context protocol. The other way we thought about this was just the consumer impact and making sure this was all, for the consumer's benefit. And so I know we're going to get to the use standard in a little bit as well, but thinking about how an agentic AI open banking tool would use a consumer's information was first and foremost in our mind as the CFPB.
Okay. So let's talk about how it's being used today, and maybe, Jane, we can talk about what you're doing at MX. I mean, you're an aggregator, you're an open banking practitioner, shall we say. What are you doing when it comes to AI applications inside MX?
So I want to ground just higher level for a second.
Yep.
Utah has a very robust, both fintech ecosystem and with the industrial loan corporations, just the great diversity of banking here. Financial data isn't something abstract. Financial data powers both of those things. It is systemically important to the state. It is critical for innovation. And sort of the healthy flow of data is not just about consumer outcomes. It actually is driving innovation, it's driving investment, and it's driving outcomes for the businesses here in Utah and generally. And so I think there is a massive competitive advantage that even if all you want to do is focus on AI, it doesn't really exist without good data, right? The data that feeds the models that can then drive the outcomes has to be good. It should be permissioned, it should be secure, and this is kind of why we've invested so much in open banking at MX. I think going back to our mission is empowering the world to be financially strong with a vision of finances as they should be. Finances as they should be self-driving money. Like, why do we still need Excel spreadsheets to manage our money? And everyone has to think about it in this room. Personal finances isn't something abstract, again, that other people out there do. How do you manage your money? How do you manage your 5 to 7 / 10 to 12 apps and relationships that you have? And are we at the place now where we can say, let's flip a switch and get into agentic commerce, because that's awesome, when you're still managing your household finances through Excel? Or hopefully through an MX application, which is significantly better than Excel. So the way that we're thinking about this is, in the 3 layers of connectivity. How can AI drive better connectivity? And that's across the spectrum of just accelerating adoption of open banking into, let's really start looking at what does on-device agentic access look like, right? And that connectivity piece, we don't believe the industry is ready for. We have built an amazing ecosystem of, permissioned APIs, and on-device access will essentially be able to bypass that. I think the second layer where AI can be deployed within MX is in our data enhancement. We spent 14 years getting to 72% coverage, market coverage from a merchant perspective. Within 2 months, we could get into the 90s once we deployed AI.
Wow.
So there is a massive acceleration in terms of adoption for just data enhancement. And then when it comes to the sort of the under the glass experience for consumers, we've long used machine learning, and we've enabled insights on a personal basis. So when you have Peter's finances, you've got a life insurance premium coming up, right? You don't have enough money in your checking account. It's good to know that, right? So being able to push insights for end consumers. Sorry, do I need to take a break?
Okay.
Thanks.
Keep going.
I can keep going. As long as you guys can hear me. So this under the glass experiences for personal guidance for the good of outcomes for consumers. I was really surprised, honestly, by the research this morning that showed we want transformational experiences ranked above personalization, right? Humans aren't segments. Unless it's personal, unless it's good for you, do you really care that it's awesome and AI-driven if your outcomes are still the same?
Right. That's really, really good point there, Jane. Okay, so let's talk about the consumer data usage standard. Particularly as it's applying to AI training and model development. So Dan, why don't you tell us a little bit about how kind of how this standard sort of applies to the development of models and AI training.
Sure. So maybe to take a step back for a second, I think what's always been most interesting to me, and I think to a lot of people about open banking in general, is that unlike so many other places in the digital economy, it's a place where the use of a consumer's data should really be for the benefit of a consumer. And that's whether it's an AI use case or a non-AI use case. And so that's sort of the starting point, I think, that we really came at this from. And so the standard that we put in place in the rule is that when a third party, so think about a fintech app of some type, and it could be an AI-powered PFM tool, it could be anything, wants to use a consumer's data, whenever it collects, uses, or retains a consumer's data, it must be for the product or service that the consumer was requesting. Maybe put another way, it should be for what the consumer asked for. You shouldn't be taking a consumer's data to be their agent, and we're using the word agent a lot these days, and then saying, by the way, I'm going to go do something totally unrelated over here that you don't know about to train my underlying model. You need more alignment between an AI agent and an end consumer. And so that was really the purpose of the standard. And so I guess that maybe get back to your question, Peter, how does that work with model training, model development? I think it depends on the facts and circumstances, which is a very annoying regulator answer. But I think it's important, right? Where if you're trying to refine an AI agent tool that you're providing to Peter Renton, and Peter Renton has requested that tool, it might be okay. If Peter Renton has requested something totally different and then you use his information to train your AI model, that's probably not okay under the standard.
Right, okay. That makes sense. So then let's talk about the implications for banks or financial institutions in general, shall we say, when, what are the compliance implications when they're deploying open banking tools, AI-based open banking tools? Jane?
So I think just to talk at a macro level about compliance generally, having sat in financial institutions, boardrooms, talking with their executives, with their product leaders for years on end, we would hear, we would love to invest in X, but we have to keep powder dry for compliance. Right? Our regulatory burden is so high that we would love to have a new mobile app, but we don't know if we're going to be able to get it into our roadmap because we've got a lot of compliance catch-up to do. So if there is one amazing opportunity, and that was thing in the research that I did love to see, was looking at AI for compliance. If we can accelerate the use of machines to do compliance and then the humans to be able to really strategically innovate is absolutely critical. I think there's a couple of opportunities and a couple of watch-outs in terms of AI in the compliance space. Like, the technology exists already, and we were talking earlier about, the Data Act that passed in terms of sharing data across different regulatory agencies in a much more modern way, right? There is enormous opportunities for regulators just to say, here's the dashboard we want to see, code your APIs up. Right? So it's less around manual exams that are very heavy from a personnel perspective. And if we can get to an automation of compliance requirements using AI or other tools, I think that's a huge win. On the other side of things, there is still a lot of leeriness around black box. And, under ACOA, for example, if you have to prove why someone was denied credit, you can't really say, well, the black box said so. My algorithm says so. My AI agent said so is not an excuse. And so I think there is still a gap between where, the inputs of data going in, which, frankly, if it's all historical data, then it may be just repeating the sins of the past. Right? Old biases that have been built into credit decisioning, informing future credit decisioning, is also not great. So making sure that these, algorithms, the AI agents that are, working, and I'll just stay with lending, working on credit decisioning, are they actually, at the individual level, are they compliant, and are they, fair to consumers? So, great opportunities with compliance, but I think it is for compliance officers right now, for risk teams, for security teams. There's a lot of unknown unknowns from the AI space right now.
Right. So let's talk about agentic AI specifically, because Dan, on our call that we had a couple of weeks ago, you mentioned that every agentic AI financial services use case is essentially an open banking use case. So can you explain what you mean by that?
Sure. Maybe to qualify it slightly more, it's every consumer-facing agentic AI use case, but that's still a pretty big bucket.
Right.
Every one of those is going to have to be built on open banking rails and open banking rules. And I think, so maybe by way of example, imagine a PFM tool that's powered by AI and is able to give you financial advice, which is always, to Jane's point earlier, sort of the self-driving money dream that we've always had for PFM, but we've never really been able to get to until now. Well, now I think there's a real opportunity to get there through some of the new tools that folks are offering at places like Monarch, places like Copilot. Some of these types of companies are clearly starting to think along these lines, but they're going to have access to consumers' data to be able to offer them financial advice, or maybe leaning in even more to be able to help them move their money, to help them move a 401k account, to help them pay off a bill, to help them choose a better account. You need not just read access, but you also need write access in the future. And I think that's where a lot of this is going.
Right. Well, you mentioned 401k moving. I mean, that is still one of my biggest pet peeves. I tried to move a 401k just this month and have to do a paper check. Unless I want to pay like $40 for a wire.
I'm going through it right now. It's miserable.
It's miserable. I mean, I'd give anything for an AI and for an agentic pathway there. And I think that's really, this is more of a 2027, 2028 kind of challenge, I'm thinking. But you've got to start somewhere. So I want to talk about the, over to you, Jane, that, people, I think there's a few people that would know about data aggregators, but most people just, they go to a bank and they don't really, something happens, they connect a bank account, there's something's going on there, but most people don't really know, one, what a data aggregator is, or two, who they are. I think, that they're still pretty much in the background. So maybe you could talk about how AI can change the consumer experience with sort of how a data aggregator can make that happen.
And just to be really clear, data aggregator in this perspective doesn't mean a credit bureau.
Right.
Like not the traditional
Correct.
aggregate and sell the data.
Yes.
So yeah, I prefer intermediary. And the reason why is the US is so spectacularly complicated. 8,500 plus covered institutions, thousands of fintechs. If you think of them as nodes, right, it's not like, oh, there is a consumer pathway. They're going to open up their bank account, then they're going to connect Venmo, and then they're going to go to their 401k provider. It's like millions of permutations and combinations to be able to actually just connect and do the sort of things that you want to do. And that's why your 401k experience is so very frustrating. So having AI at least in the foreground of how to simplify just that the 360-degree view of your money, regardless of where you choose to bank or borrow or invest, right? That's sort of step one. Step two beyond the nodes is having intermediaries that add value. So again, think about your own experience. If you were to open up your mobile app right now and go to your transaction list, what does it look like? Right? Was that transaction built for a machine to read, or was it built for you to read? And I'm going to go with 8 out of 10 times it's built for the machine. So we've still got a really, really long way to go in terms of just basic transparency for where did I spend my money. And again, if you're at a financial institution, one of your big costs is people calling the call center saying, I didn't make this payment. We're calling it friendly fraud, but like, look at the data. You can't actually understand what it is, right? Because of that sort of the long-term, messiness of machine-readable data. So if you think about intermediaries less so as, oh, we're just passing data through, and more so as connecting a very complex ecosystem, adding value in terms of like transparency and insight, and then working with partners to drive to outcomes. Right? It makes a lot of sense if you're a financial institution, for example, and you see from your open banking dashboards that 75% of your outward bound data is for lending use cases. Maybe you need to look at your own products and go, maybe we need to dial up how we look at lending within this organization. But you don't know that if you haven't invested in open banking, right? All you're seeing is a bot hit your system and, data leave, but you don't know where it's going or what it's for. So that is one of the key things, again, for people to be able to have a lot more optionality, but also for the companies that serve them to have much better insights.
Yeah, I'm looking forward to that day, because I feel like we've, to me, one of the biggest disappointments in fintech, and I've been involved since 2010. I know you guys have both been around for a while as well. It's the PFM space has gotten incrementally better since 2010. Hasn't been transformed. And I keep thinking that it's going to happen, but maybe, I mean, what do you think? Are we finally going to see useful tools because we have the technology now to create them, or what do you think?
You have to just think about this as a competitive lens first, right? Companies spend a lot of money identifying, targeting, acquiring, doing KYC, cross-promoting, and doing ongoing compliance for every customer, right? So if you've done all of that work and then you only have crappy tools to service them longer term, it's no wonder they look elsewhere. Right, so I think there will actually be a swing back. This is a Jane prediction. There will be a swing back to more investment within, especially larger organizations, to do, share of wallet consolidation. Right? If you've already invested in a great mobile app, if you've invested in the sort of, payments use cases, lending use cases, investment use cases that people tend to go outside for, it's a very easy lift to cross-promote and bring those assets in or those loans in, versus going and acquiring new customers. So I think the first step will be much more around how do we take care of existing customers better, retain service, give them more insights. Again, focus on outcomes versus just, do a loan with us. Why? So I'm hopeful, but I am worried about the longer tail of community banks. I'm worried about credit unions who haven't invested, that sort of Main Street America that relies on, local deposits and small business lending for a healthy, local economy. That's where they could really get hurt.
Right. I really hope, do you want to add to that?
Yeah, I just think alignment of the core revenue model is such a big piece of this puzzle too. If you think back to the Mint days, the reason that all went so terribly wrong is because at some point it all just became trying to sell you another credit card, right?
Right.
And I mean, I was a Mint user. I remember going into that platform, and at some point I just stopped using it because it's not actually doing anything for me. It's just trying to get me to spend more on whoever's paying them to do that right now. Through a subscription-based model, the incentives are a lot more aligned. So I've been really hopeful based on some of those models becoming more common now.
Right. And just speaking of community banks, I hope that every community bank watches the discussion with Phil Goldfeder and Comptroller Gould, because even if they're not OCC regulated, they should be watching that, because I think that will, so many community banks, it feels like, not the ones in this room. The ones in this room are forward-thinking by positive selection, because by being here, you're obviously showing an interest in new technology. But the biggest risk, as Comptroller Gould said, is doing nothing. And I think that's something that banks should really take to heart. So in closing, then, why don't we talk about what can we expect down the road? We talked about personal financial management. I think that is an obvious use case that I think will get better. But what else do you think can become possible when we have innovation at the intersection of AI and open banking? Dan, why don't you go first?
Sure. I think another place people are talking about a lot right now is agentic commerce. I have some skepticism around a bit of that. One place I do think there's something interesting, though, is a lot of us have a lot of different credit cards in the room, and different cards offer different rewards and how could you optimize that? Say when you're using Apple Pay, please use the card that's most optimized for this transaction that I'm about to make right now. That hasn't been possible before. It hasn't been offered ubiquitously. Those types of tools that optimize the use of different tools in your financial life for the use case right in front of you feel much more possible now than they have previously. And then there's a lot of other use cases that Jane can probably talk about really well. We're going to see continued improvement in underwriting, I believe. We're going to see continued customer retention plays, people offering more things in-app using companies like MX. I think actually a lot of the activity, interestingly, has been here in Utah. MX is obviously sort of an OG in the space and has been doing this for a long time. You also have companies like Atomic that really started with payroll aggregation and direct deposit switching that are now going to really be the rails that a lot of agentic commerce use cases are built on as well.
Yeah, I just actually interviewed Jordan Wright for my podcast, and I love what he's developing. I think that's made possible only through open banking, and I think it's if you check out my podcast if you want to listen to that. Jane, last word.
So I haven't said this yet, but open banking is bidirectional. right? I think it's often seen as how does data leave an institution and go to another institution or a fintech. But again, assuming the average American has 5 to 7 accounts, the richness is in data in, right? And being that custodian or data fiduciary and being able to give that 360-degree view. Like, that should have been table stakes 5 years ago.
Right.
We're still pushing through. But where this could go, I have made this plea from many stages, from many years, which is we still think in terms of B2B and B2C. It's business to consumer, it's very patriarchal, it's monodirectional. Like, at some point, this data is going to allow for C2B, right? Consumer to business. I fly my family of 5 to Australia every year. And every year, the travel aggregators get paid, Google gets paid, Facebook gets paid, the credit card company makes a fortune, right? Like, I have loyalty programs with all these airlines. Why are they not pitching me in January to say, we've saved your seats for December?
Yeah.
Right? Give us your money now and it's going to save you. If you don't have to pay those 5 parties, that's easy 20% off, right? So that's what I want to see. I would love to see merchants getting a lot more active in terms of direct to consumer or consumer to business. Cutting costs out of the ecosystem, taking less money out of my pocket. Again, there will be massive implications across an ecosystem from a payments perspective, from a tech platform perspective. But at this day and age, for us to be paying the tax, a 20% tax on something like an airfare for very little value add, I still have to do all the work.
Right.
Right? That really isn't that helpful. So that's again, it's always my wish for anyone in the room who wants to solve this for me and my family of 5, I'd be grateful.
I don't know if I've told you this before, Jane, but my rejected name for the 1033 rule was actually the earn your customer rule. It didn't work out. I lost that debate, but I thought that would have been a helpful framing.
That's a great way to end it. Earn your customer rule. That's what it should be called. Okay. Well, thank you very much, Jane and Dan. Give them a hand.
Thank you, Peter.
Thanks, guys.